Thank you, Nelson, for joining us today, and congrats on the execution of this direct listing. As Morgan mentioned, it's the biggest direct listing ever by market cap and the first large one for Nasdaq. Interestingly, you've done some smaller, about a dozen smaller direct listings, but the bigger ones that we've tracked, Spotify, Roblox, Slack, Palantir, all went with the NYSE. So, what has changed? Why were you able to bring Coinbase to the Nasdaq? And do you think that the fact that a $100 billion company was able to successfully execute a direct listing will portend more large companies to pursue this method of going public?
Well, thanks, Leslie. Thanks for having us on. Truly a watershed moment for Coinbase, for crypto, and for Nasdaq today. We've been working with companies and talking to companies about direct listing for a while. So for us, it was really a matter of time until we were able to participate and have a large one on Nasdaq. But to have it be Coinbase, to have it be the largest ever, is really a fantastic moment for them and quite frankly for us as well. It was a very, very smooth process, and I do think, to your second question, as the last few years have gone by, we always have a handful of direct listing conversations going on, but probably more now than ever. I wouldn't say it's anywhere near replacing the IPO, or that we also see a lot of popularity in companies thinking about the SPAC process. But clearly, direct listings are here to stay, and we do anticipate seeing more of them at Nasdaq.
Do you expect to see the Coinbase listing today as a signal to other companies in the crypto economy, as Coinbase calls it in its prospectus, to go public? Do you think it's a signal to other companies in the crypto world that listing on the Nasdaq is a good idea? It's a good idea to become a public company.
Yeah, well, Coinbase is obviously the category creator. They are the first one of its kind. They have an amazing brand, so well known. So if you are, in the crypto space, if you are a crypto exchange, you clearly look at this moment and understand that it is possible. There's certainly investor appetite. So although I wouldn't comment on any specific conversations we're having, clearly this level of excitement around this transaction should lead to more interest.
Now, Nelson, we have the share price on the screen there at $332 a share. It's well down from where it opened up, about $381 a share. At that level, it implied a $100 billion valuation, which we've been pointing out means that Coinbase is worth the equivalent of a Nasdaq and an ICE, the parent company of the New York Stock Exchange, combined. So with that said, obviously, you're listing Coinbase. You welcome them, onto your listing platform. But how do you see Coinbase as a competitor? How do you see crypto trading in general as with regard to the exchange industry?
Yeah, well, they're clearly a very different company than who Nasdaq is. So over 55 million users are registered users they have on Coinbase. It is clearly a different asset class, and where Nasdaq is today, obviously this is a growing asset class, growing interest in it. So we are participating, hopefully, with more listings, the ETF market. We do provide some of our trading technology to crypto exchanges, but we don't sit here and view a Coinbase as a competitor.
Hey, Nelson, this is Frank Holland back at Inglewood Cliffs.
Hey, Frank.
Congratulations on the Coinbase IPO. Obviously a big win for the Nasdaq today. But earlier this year, you didn't get the Roblox IPO. You didn't get Coupang. Do you think that today reestablishes Nasdaq as really where tech companies should list?
Well, I appreciate you asking the question. This year we'll have the companies are going to raise $1 billion or more. We'll have 70% of those. Many of those are technology. So tomorrow alone, we have companies scheduled to raise $2 billion and $1 billion. So we think we're getting more than our fair share of the large listings. I think when you think about technology, you do think about Nasdaq. And we love our brand positioning, but more so our value proposition to attract listings with an 80% win rate. And again, in the large market, we're really doing exceptionally well, especially this year.
Nelson, it's Morgan. I'm just curious, the actual logistics to pull this off today.
Yeah.
What was involved and what were the lessons learned?
Great question. So when you think about the direct listing versus a traditional listing, a lot of the processes are fairly similar. But what we had to think about, along with the advisors, is as you saw, the continuing rise last few quarters of crypto interest, certainly a lot of retail interest. What we were prepared for today was an exceptionally high participation by retail. The complexity is not sometimes around when you hear the volume number. It's more the number of orders we're going to see. So that was a lot of our preparation, again, working with the advisors, understanding what configurations we needed to have to execute. But when you think about the direct listing, it's a pure auction. It went off exactly as you would hope it would go off. Investors were able to see for a good 3-hour period where the market was in a very transparent way, and they could decide if they wanted to participate. So it was very smooth.
Shepard Smith here. Thanks for watching CNBC on YouTube.